Hello guys, this is the Crypto Cowboy. We are on June 26th, it's about 11:20, and welcome to a new edition of technical analysis here in Bitcoin. And let's take a look at what happened over the past few days since we made that last video. Bitcoin broke up higher. We reached almost $13,000. So very impulsive, very strong move. I think it kind of buries the concept that we are still in a bear market. We retraced almost, if I go and look at the daily candles on the weekly charts, I mean, oh my god, you can see how strong these still look. I was actually mentioning in one of the videos this bullish engulfing pattern. So if this fails, this is kind of what tends to happen when a pattern fails, like the star here. So we are reaching almost 78.6% of this drop of this so-called bear market that ended in December 18, and we are now at the 78.6, very close to it, at about 13,415. So I expect a little bit of resistance up here, and I'm going to talk about the other wave counts that we have, and kind of these levels are important. So doesn't mean that it's going to stop here. No, absolutely. If anything, this looks extremely bullish, so it can continue even higher. But this is just a little bit of a quick candle look. So if I go back and let's talk about the two primary counts that we're watching in Bitcoin. So one of it is this one where we're looking at 1, 2 in orange, 1, 2 orange, 3 orange, 4 orange, and 5 to complete 1. And then the other wave count, we have a 1, 2, 3, 4, and 5 that says that this substructure, it's getting close to being complete of a wave 1. And then we're going to pull back in a wave 2. And where this pullback it will be, this we don't know yet. We do have some fib ratios that we're going to show up here once once this move is complete. So basically, which one of this is correct? And the interesting part is that it doesn't really matter. What's important is the fact that both counts here call for this wave 5, right? So we have a 5 of 1, or we have a 5 of 3. And when the wave counts kind of point towards the same thing, that means that we are likely to have a correction in a pullback, either in a wave 4 or in a wave 2. Obviously, if this is going to be a wave 2, you would first get a wave A, then possibly a B, and then a C. And if this is a wave 4, then this could be anything. It could be a triangle. Pretty unlikely that it's going to be a zigzag, but it could be a triangle, it could be a flat. So it could be a complex correction into a wave 4. I'm sorry. So again, when you see these moves so sharp, and especially, let's say that if you've missed being long on this, and maybe as a new trader you are extremely eager to short this market and say, well, it's going to drop here pretty aggressively and I'm going to catch a beautiful trade. While that can happen, you are actually going against a trend, and this trend is really high. Now, you might have tools that tell you there are divergences and moving averages or whatnot that show you that you're willing to short the market, and especially if you have this context of the Elliott wave, it's quite possible. So you can try going short this market based on the information that you have, but you have to keep in mind that you can get stopped out numerous times by trying to short, and eventually the trade that's going to pay you up has to make up for all the losses, the small losses that you take, even that you're putting stop losses if you're a serious trader. And then the moment it comes down, it makes up for all those losses and some more. In my personal experience, I've done that numerous times, and I've lost a lot of money doing that. So I stopped doing it, and just trying to become more risk averse and more careful with your entries. What I would do here is, if you want to short the market, I would wait for the market to prove that we found the top. And the way you do that is you wait for the market to sell, let's say, into a 5-wave move, either on a 4-hour chart or on a 2-hour chart. You can see a clearly impulse wave down that tells you that the market is about to correct, and now you have a top to work with, and then you can sell the wave B up and then continue to go down into that wave C. So anyway, the reason why I'm saying that this is wave 5 in both, and the reason kind of why I like this wave count better better than this one is because I'm looking at this wave 4 here, comparing it with this wave 2, and I think that they match better than matching this wave 4 with this one, which is a little bit larger. So basically, if it is to be a correction, I think it's going to be a wave 4 followed by another 5. But you know, that's something that it doesn't really matter at this point. We're going to deal with it once we correct. So if we go back on this wave count, if this is indeed a wave 5 here, what you can see here is that I placed some extension, some fib extension levels of the wave 5. So where is the market likely, what are the most common relationships in a wave 5 versus the rest of the waves, I guess is the question. So I've placed here, there are three kind of main levels that the wave 5 can stop at. And this is one of them, it's wave 5 versus wave 5 versus wave 3, and we have the 61.8 fib relation between those at 13,203, and I think this one it's pretty much right there. If I go back to a 1 hour chart and see how this looks, the market is making, as we speak, new highs, so we are reaching those levels. So am I going back to the 6 hour? Let's go, there you go. The next level to the top side will be wave 5 compared to, actually I'm going to go back to a daily so you can see a little bit better. It's going to be wave 5 versus 1 plus 3. So if I take the whole move from the bottom here all the way to the top of wave 3, so I take an impulse move from here. Basically, you do an expansion tool. You take your tool and you go from here to here, and then you pull down to the bottom of the wave 4. That's give you the extension up, and that extension comes at 13,697. That's 5 versus 1 plus 3. All right. The next one that you have wave 5 versus wave 1. So if you take this wave, the size of this wave 1, and you basically double it, that's a 200% relationship, comes in at about 13,887. That's right up there. So excuse me, we do have a cluster of zones back here. Now, does this mean that the market is going to stop here? No. Is it likely? Yeah, I think so, possibly, right? But I'm not going to argue with the market if the market keeps going through my levels, right? And I'm not going to say, well, the Fibonacci doesn't work or the Elliott wave doesn't work, because I tell you what if this is wave 1 and 2, and this is wave 1 and 2, and now we're actually doing a big third wave up, right? So just so I can put that up there, and just so if you're thinking to short this market, or if you know anybody doesn't believe that crazy stuff can happen in the markets, you haven't seen a lot. So I'm just going to throw this out there. It's very possible that this is a wave 1 and this is a wave 2, and then we go back and say this is another wave 1 and then this is another wave 2, and instead of pulling back, we're actually accelerating up. You might get a pullback here. This is another wave 1, a small pullback in wave 2, and then we keep going up higher. Okay, so anyway, we are getting a little bit extended here, I agree. Let's take a look at the smaller time frames here and just go to the 3 hour chart, and I'm going to decompose this a little bit and see if I have anything saved here. There you go. So this is what kind of screws up my count, and you know, because I try to make the counts based on the corrections because that's the correct way and it's easier. This correction here kind of screws things up, and I'm going to go to the other count and say, okay, how do I count this? Because if I go 1 2 3 4, then what is this? Is this an extended fifth? Do I go 1 2 and then we're doing a 3 4 and 5? Very possible, but that means that we're going to pass this fib relationships back here, right? But it's very possible. So we have broken through the top of this channel, which means that we are in a kind of a third wave price action. So until this stops, there is no point on even labeling this. You just got to let the market run. Okay, now what you can do is, if you're long or if you have positions, you watch key levels. So for example, the top of this cluster right here, 11 to 37, you know, you can have your stops below this, because if the market pulls back below this, then you know something else is going on, or they can be below, you know, this critical level. So anyway, this is this wave count that says that we might be, you know, approaching some interesting levels up here. Then the next one is the one that says that this is actually a wave 3, and then we have a wave 5 blue, where and on this one I don't really have a whole lot of projections, because basically on a wave 3 here, we have passed the 423%, and the next one would be like 600, which is about 30,000. And I don't think this market is going to get that crazy to go up there to give me that crazy fib projection all the way up there. So, but for right now, we kind of passed that. And in terms of wave 5s here, I have a 5 versus 1 at 206 1.8, 5 wave 5 versus wave 1 here. So there's something going on around these levels as well. So let me just go to a 3-hour chart and try to subdivide this. I think I have this saved up, and not too crowded, but I'm counting this. Remember how I was saying in the other wave count that this correction kind of screws me up? Well, what we have here is I put this as a wave 1, 2, and then I have this as a third wave, 4th and 5th. So we're going, subdivision would be 1, 2, 3, 4, 5, 4, 5. So let's go and do that. So that's how that looks. You go 1, 2, 3, 4, 5. You have 4 triangle, and then you go up in this wave 5. And I would have to go back to a 1-hour chart to look inside this structure. So if I go here from this wave 4, I have a 1, 2, and now I have this wave 3. We go back to a 45-minute. All right, then I'm going to subdivide it again. There you go, and I'm going to go even to a 10-minute chart, right? So if you can remember, I have this wave 4, this wave 1, 2. So you have 1, 2, 3, 4, 5 for 1. You have a pullback in 2. Then you go 1, 2. 1, 2, 3, 4, 5 for 3. Pull back in 4. Nice zigzag. This could also be a wave 2. So this whole move can be a 1, 2. And now we're going into a 1, 2, 3 overlap in 4. I don't know what this is. I think this is a little bit tricky here, so it could be a 1, 2, 1, 2, 3, 4. So anyway, the subdivisions are kind of clear up here for right now, and we can pull this a little bit higher to go to a wave 5 to complete this. Probably expect a 4 and then some sort of a pullback in here into this wave 4, and then go up to complete 5. So like I said, in the other wave counts, we are reaching some crazy levels, but it's possible that we can keep going through them. So this is a pretty small time frame here, so I don't want to spend a whole lot of time, but I think we still got to get up and to finish up this wave 3, wherever this is going to be, pull back in 4 and go back up in 5. So we'll keep monitoring that. Basically, that's what we have in Bitcoin. And then if I take a quick look at Litecoin, this one, it's still pretty much going nowhere. It's still in an uptrend. We are monitoring if this was going to be a wave 4, but I don't like it's way too extended compared with this wave 3. So there's something else going on here. Either it's another 1, 2, could be another 1, 2 possibly, or with another pullback, but that means that Litecoin has to break aggressively higher. It's been lacking. It's been lagging the other cryptos for quite a while, so we got to see what Litecoin does. Ethereum, I kind of like, and we're still monitoring this development into, if you go into the 3-hour chart, my count was coming 1, 2, and then ideally for 365 into a wave 3, pull back in 4 and keep going up higher. Now be careful in Ethereum, because here's what happens. If we're breaking to the top of this channel, this move can actually accelerate very, very fast, and we can get to $500 in Litecoin or $450 in no time, because would be indicative of an extreme impulse wave if we break to this one aggressively. Okay, so that's the Ethereum, and I think that's all I got for today. I think did I talk about the candles on the weekly? This is what I have in candles. I'm going to go up on Bitcoin and show you the candle stick chart. We are reaching about 786 retracement of this whole bear market in 2018, which comes at about 1345. So there are some interesting levels happening at around 13,000, between 13,200 and 13,500, and I want to see how the market reacts here. So far on the weekly charts, this is like 3 white soldiers, or whatever they call them, and this is pretty darn bullish. So but we'll see, and we'll keep monitoring. If you guys want to learn more about Elliott Wave, come to our Telegram channel, and I have the description below the video. And if you enjoy the content, hit the thumbs up button so our content can rise a little bit. And leave me any comments, any suggestions, and I'll talk to you guys next time. Thanks. Bye.